All right, so today I'm going to talk about a couple of SPACs that I'm looking at, and I think there's a huge upside potential for them. Before I get us started, kind of going to review, SPAC versus IPOs for those of who might not know the difference, and why the SPAC is a more efficient way of actually raising money if the founders know what they're doing. So basically, a SPAC is a reverse IPO. So in an IPO, a company want to go public, they go and find an underwriter, which is usually an investment bank. And investment bank value the company, go on what they call a roadshow and talk to different institutions, and then after that they raise the money. It's pretty inefficient because you get a lot of commotion in terms of media around the company that want to go public, and there's a theory called IPO underpricing. So usually investment banks underprice and leave a lot of money on the table. SPAC, or special purpose acquisition company, is the exact opposite. First you raise the money goes into a shell and is traded publicly, and then after that those people who raise the money, who also have a skin in the game, they go and find the company. So you can see it's a more efficient way of raising money because the cash is held in the trust. And obviously they've been extremely popular in the last few years. You can see in this chart 74% increase. 2020 last year, over $50 billion was raised in SPAC. So two SPACs that we're looking at, one of them is IPOF and the other is PSTH. IPOF is by Chamath. Probably a lot of people, if they're in investment industry, they kind of know Chamath. But he has a fantastic track record. He was a derivative trader at BMO. He went on and worked at Facebook for a while. He ran an investment firm within Facebook. He was one of the early investors in Palantir in 2010. In 2013, he came on CNBC and talked about Bitcoin. When nobody was talking about Bitcoin, everybody called him crazy. 2016, he was a huge Tesla bull. Put a huge bet, I think around $1 billion on Tesla in 2016. And his first SPAC, IPOA, was actually Virgin Galactic, which has been really successful. In the past 10 years, his compound annual growth rate is around 30%. So huge upside, fantastic track record. Almost everybody in the investment industry now knows him. He kind of brags. Twitter likes to troll him a little bit because he's very outspoken, but basically in 2020 he made 8 investments, and I'm going to talk about some of the investments. But if you would have followed exactly what he did, you would have had a 300% return, which is pretty fantastic compared with the 18% of S&P 500. So he has a series of SPACs, and his goal is having IPO A all the way to IPO Z. And he's done a few of them, and we actually took some of the trades with him, and we invested in some of the SPACs, and where we actually felt like there's a huge upside. First one was IPOA, obviously, in 2019. It merged with Virgin Galactic, and then the ticker changed to SPCE. It was huge, very popular among especially day traders because it saw a huge volume coming in. Since the SPAC, since last year, the return has been 150%, so phenomenal returns. Second one was IPOB, and this one of the one that we actually invested in. And this one merged with Open Door. Open Door is a digital real estate agent, so you don't really need real estate agent anymore. You can actually buy and sell houses online. It's about downtime with a really modest valuation, I think 4 or 5 times sales. So very modest valuation, and if you would have invested in Open Door, your return would have been 160%, so pretty phenomenal. IPOC was Clover Health. Obviously it's in healthcare, so it doesn't get as much love, but even with that, over 50% rate of return. IPOD, we don't know who the target company is. IPOE just announced last week it's going to be SoFi. SoFi is a fintech company. They recently I think grabbed the infrastructure that actually works with Robinhood. So huge company with huge upside. So far year to date, a 90% rate of return, so phenomenal. But the one that we're actually looking at really closely is IPOF, and I'll tell you the reason why I think there's huge upside with IPOF, and it's still kind of early to get in. Basically, IPOF is his biggest SPAC yet. He's raised about $1 billion, and out of this $1 billion, I think 200 million is his own money. So he has a huge skin in the game, and there's a lot hanging on it. And from the speculation and the talk on the street, it seems that he's planning to take Rivian public. And Rivian is, the EV maker. They're ahead of their game. They already have contract with Amazon. A very, very successful company, and it seems like, and Chamath has been kind of hinting on CNBC and on his Twitter that his next SPAC is going to be about climate change. So we really think that this is a huge play. And if this is true, this SPAC is absolutely going to explode. So this is the one that we're looking at closely, monitoring it. Obviously looking at, a lot of the indicators, the talk on the street, and the volume that is coming in, and the move as a percentage of volume to kind of see what is the interest and how much of it is retail and how much of it is actually institutions. So we definitely think there is huge upside here, potentially, if the deal is going to be announced within the next month or so. And the second SPAC that we're looking at is PSTH. This is the biggest SPAC yet. So over $4 billion has been raised already. But Bill Ackman has, kind of said that he's willing to put another $3 billion if the deal is right. And obviously, no one knows who's the acquisition target is for this SPAC. But if you follow Ackman and his strategy, he's a very fundamental guy, investment banking background. So he's looking at companies with kind of clear cash flows. And predictable cash flows. He hates tech plays, and if you look at his portfolio, he rarely owns any tech plays because it's so hard to project cash flows of tech companies because, first of all, they're always ripe for disruption. Even when they're disruptors, they're ripe for disruptions. A couple of guys could start a business in their garage and get you out of the business. So we actually don't think that the PSTH is going to be merging with Rivian. We think another target and another rumor that is, we think Bloomberg might be a target for Ackman. Bloomberg, they make the data intelligence platform called Bloomberg Terminal. Almost every university has one of them. Every buy-side firm has one of them. If you worked at Wall Street or have worked in wealth management or any buy-side firm, there's at least 10 or 20 Bloomberg terminals. They cost about $20,000 a year. They're quite expensive. So the cash flows are really predictable in this business, and that's exactly what Ackman loves. And if he actually goes ahead and take this company public, there will be huge upside. The SPAC is already up 35% just because of the rumors that people in the street think that it's gonna merge with Bloomberg. So huge upside here. Definitely tell us what you think. But these are the two SPACs that I'm gonna take a closer look at and kind of observe it, see what happens within the next few weeks. But definitely we will be increasing our position size in it as well.